All right, thank you for joining us at FutureMoneyTrends.com. I'm here with Rick Rule. He's the chairman of Sprott Asset Management USA. Rick, thank you for being with us today.
Pleasure.
Rick, I want to pick your brain on the economy and being a resource investor. You're a very famous resource investor. Is now an okay time to be in the resource sector? Because you kind of look at China and the global economy slowing down. Wouldn't that be bad for resources?
I think this is an interesting time to be in the resource business. We have come through what I think is probably the first half of a resource supercycle, reminiscent of the supercycle that we enjoyed in the 1970s. Well, maybe you didn't, you're too young, but I certainly enjoyed it. I think we're right now in a cyclical decline in a secular bull market. And I think this is probably particularly attractive, given that resource equities are off 30 to 40% in what I believe is an intact bull market. It's worthy to reflect on the fact that in the great bull market of the 1970s, when the gold price advanced from $35 an ounce to $850 an ounce, good bull market by anybody's measurements. In the middle of that market in 1975, the gold price, having advanced from $35 an ounce to $200 an ounce, fell by half to $100 an ounce. People who were shaken out of that, either because they lacked the capital or lacked the courage, missed a move from the bottom of $100 an ounce to $850 an ounce over 6 years. I'm not saying that this down move is analogous to that, but certainly that points to the fact that you can have very vicious cyclical declines in secular bull markets, which by themselves, if you have the courage to participate in them, are wonderful opportunities, and that's what I suspect this is.
What opportunities are you looking at in the resource sector or anything? I think the first time we spoke, you talked about water.
Yes.
What's your frame of mind when you're looking at some of these opportunities? I mean, obviously, this is not a next year investment. It might be a decade investment.
Well, water is a very, very, very interesting topic, and I'm glad you brought it up. Water is a when investment, not an if investment. There is absolutely no doubt, if you look out the window here, that people like to live in dry places with nice climates. The difficulty with that is they live in places that can't sustain them, so they have to import water from other places. Because the price of water has been allocated politically through many parts of the world rather than via the market, it's been allocated extremely inefficiently, and it's been allocated well below current cost, never mind replacement cost. When we lose the ability to do that, the water price will go up dramatically. In addition, the pricing mechanism for water, even before the scarcity, is inefficient. It's been politically allocated. So as an example, water that's used here in California for doing things like growing rice in the desert might sell for $100 an acre foot. Rice that's used in urban areas for flushing toilets and brushing teeth goes for $1,400 an acre foot. So you have a 14-fold arbitrage depending on the political allocation of use. It would stand to reason that when we run short of water, the political imbalances that we see in water will begin to redress themselves. And so one would expect that agricultural water would reprice towards urban water as the price of both waters tended higher. What bothers investors is nobody knows when. And as investors, particularly in the last 30 years, since really 1982, we have seen a shift more towards a short-term trading orientation rather than a longer-term investing orientation. And people seem to have apoplexy over the concept of holding a stock more than 3 months. An investment in water or an investment in any resource that's structurally undervalued and needs to revalue is an investment that needs to be made in a 5 or 10 year context. That works very well for me. It doesn't work for most people, which of course makes it work better for me, because given the uncertainty of the time outcome, although the ultimate economic outcome is certain, I buy things more cheaply than I would in a rational market.
Real quick on agriculture, because I want to get this question in. We talked about water. Presentation I saw at the Casey Summit, which was sponsored by you guys, by Thomas Barnett. He was talking about just this rising middle class. They're going to eat a lot of food, and they want to eat more, and they want to eat better food. In the agriculture front, you touched on water. What is a good way for the average person to make a play on this with a long-term? What type of agriculture stock should they be looking at?
Well, it's very, very difficult to buy agriculture stocks. One of the things about that business is that it's very, very, very fragmented, and there are very few public companies available. One could look at, if one were a U.S. investor, some of the hybrid agriculture water equities. I can't discuss them on video because of U.S. securities laws, but there are certainly 2 or 3 that are reasonable plays. At once good farming companies, but companies that own large amounts of water resources. Investors would also, I think, do well to look at the nutrient companies, the big fertilizer companies, principally Canadian, because we face increasing challenges on a global basis to feed ourselves. First, because of Malthusian reasons, our population continues to grow. But secondly, for the reason you said, which is important for the entire natural resource thesis, which is the 3.5 billion people at the bottom of the demographic pyramid are becoming, over the last 30 years, slowly more free. And as people become slowly more free, they become rapidly more rich. Deng Xiaoping said 30 years ago, to be rich is glorious. And the blossoming of wealth in China as a consequence of the gradual liberalization of the population has meant that several 100 million Chinese are able to aspire to the life that you enjoy. And that life is more calorie intense, it's more energy intense, it's more commodity intense generally. But the biggest explosion at the bottom of the pyramid has been people taking their family from 1,600 calories a day to 2,400 or 2,500 calories a day. It's the first thing that people want to do. It's what you would want to do if you were very poor. You would want to make sure that you could feed your children. They're no different than you.
In closing, then let me ask you this. As far as success, what do you attribute your success to?
I had very good mentors, for one thing. I read a book early in my career called The Intelligent Investor by Ben Graham, and any investor who doesn't read that book is making a big mistake. I learned in the course of my career that in capital-intensive cyclical businesses like resources, you are either a contrarian or a victim. Those are your 2 choices. You have to buy when others are selling, and you have to sell when others are buying. And finally, you have to rely on common sense, not hot tips. You have to remember, I think, that the markets aren't sources of information. Rather, they're facilities for buying and selling businesses that are either undervalued or overvalued. Common sense means a lot. If you, as an example, look at a junior and you notice that the junior is spending $3 million a year on exploration and G&A, and they have $1.5 million left in Treasury, that means they have 6 months left to live unless they do a financing. This isn't rocket science, but you have to sit down and do it. Just because you get a hot tip out of some newsletter or something, that's absolutely no reason to buy a stock. Do a little bit of work. Condition yourself as to what makes these companies work and what makes these companies fail, and apply the screens that you've determined yourself with, of course, the help from the intelligent investor, and you will do well. Fail to do that, and you won't do well. It's very, very, very simple, ultimately.
Rick, if somebody would like to partner with you guys and invest with you guys, where's the best place for them to go to on the internet or to call?
We would be delighted to have people visit us at the website, which is www.sprottglobal.com. They can go through all the educational material that we have there. They can pull up all of the recent sort of papers and investor aids that we have, and they can contact us there. Or if they're in the U.S. or Canada, they can call us toll-free at 800-477-7853.
Rick, thank you so much for your time.
A pleasure.
Appreciate it.